Hello, everyone, and welcome to the Crowdfunding Q A. I have the pleasure of having Jonny Price, who is I think, Jonny, you are the Director of Fundraising for WeFunder, correct?
That's right, yeah.
Awesome. So listen, guys, I prepared or provided his entire bio in the description, so you'll have an opportunity to read about him on your own. I wanted to kind of just jump right in, but for those of you that may not be as familiar with me, my name is LeTonya F. I'm an award-winning attorney, and my specialty is actually assisting entrepreneurs with building strong and profitable brands. So Jonny and I are going to have a conversation, guys, about actually about crowdfunding, equity crowdfunding specifically. And just very quickly, I wanted you guys to know that a big part of my motivation for doing this is I'm seeing all these friend circles, funding circles. If you put in $500 and bring in 5 people, you'll get 4,000 and all of this. I'm not a proponent of that. For those of you that have reached out to me, you know, I told you that I think it's a pyramid. But I wanted you guys to get some great information from Jonny, and we're going to talk about what crowdfunding really is so that it can dispel at least some initial concerns that you guys have and hopefully protect a lot of you from losing your money. So Jonny, you think we can accomplish that in the short time that we have today?
I think we can accomplish that and a whole lot more.
Awesome. So before we jump into this quick Q&A, can you talk with them a little bit about WeFunder, who you guys are and what you do?
Yeah, absolutely. So we're an investment crowdfunding platform. So we help startup founders and small business owners raise capital, usually equity, sometimes debt, from investors on our platform. But it's also kind of crowdfunding. So think Kickstarter, but whereas in Kickstarter, it's kind of like pre-revenue or perks. On WeFunder, you're raising investment capital. So just as startup founder would raise money from angel investors to invest in equity in the company, on WeFunder you can do that, but rather than raising from a handful, a dozen angel investors, you're raising from potentially thousands of people. And then as an investor, anyone can invest in a public company on the stock market, right? Until recently, the only people that could invest in startup private companies were millionaires and billionaires, accredited investors. But thanks to the Jobs Act, which Barack Obama signed into law in 2012 and the SEC rolled out in 2016, now anyone listening to this, watching this video can be an investor in a startup for as little as $100 on a platform like WeFunder.
Awesome. I love it. And the reason that I'm so excited about what equity crowdfunding does is exactly what you showed, is that the small investor, right, now has an opportunity to get in on investing, where that was not like that even 10 years ago. This was not something that could necessarily happen on a grand scale, right?
Yeah, exactly. The law changed in 2012, the Jobs Act passed Congress. The SEC took a few years to roll it out. And then since May 2016, that's the date after which ordinary people, middle-class Americans, as well as millionaires and billionaires, can participate as micro angel investors in startups. And you can do that in 5 minutes with as little as $100 on WeFunder today. If you go to WeFunder.com, there's about 100. I think as of this morning, I saw 113 companies. So if there's one in a sector that you're interested in, or if there's one in your city where you live, or one that you think, wow, this looks really exciting, you can participate as an investor in that company, just as you could if you went to E-Trade or Robinhood and invested $100 in the stock of Apple or Amazon.
Right, absolutely. But they probably get a whole lot more for the $100 on WeFunder than they would. Can you even buy Apple stock for $100? I don't know.
There are these like fractional shares now where I think you can, but I mean, you get a higher percentage of the company, but obviously it's a lot riskier to invest in a startup than it is to invest in Apple. Apple's probably not going away anytime soon, but you know, most startups are not gonna ever generate a return for their investors. But if they do generate a return, then obviously that return can be a lot bigger. So basically, you know, versus public stock investments on WeFunder are a lot riskier, a lot more illiquid. It might be years before you earn a return, but the upside is, if it does work out, it can be a lot bigger.
Absolutely. And I think that what those that are interested in investing in stock is, you have to understand that it's risky, but it's also a long game. I'm looking here and Lamar Wilson says hello. He's doing. So I know him.
Lamar raised capital with us for his company Sunjoined, and he is a very smart cookie. So Lamar, hope things are going well with you, man. It was a pleasure working with you, and hope we get to do that again sometime.
Yeah, absolutely. So I definitely wanted to make sure to let you know that he said hi. So let's kind of hop right in, because I had the opportunity to sort of collect a lot of questions, and they kind of boil down, you know, into some of the same. So the first thing, or the first question is, what does one have to do to be able to do a crowdfunding campaign on a platform like WeFunder? So the criteria, what's some of the major criteria?
As an entrepreneur, yeah?
Yes.
Yeah, honestly, there's very few criteria. We have a range of 50K and upwards in terms of the amount of capital that you're looking to raise. So even if you're, you know, only looking to raise 50K as a friends and family round, WeFunder can be a good option for you. And honestly, you know, we have idea stage companies that are pre-launch, you know, and if a founder can recruit investors to invest in their company and their idea, and them ultimately as a person and as a founder, then we'd love to have them up on WeFunder. And so, yeah, very few criteria. I mean, if you're trying to raise $1 million on WeFunder, obviously you're gonna have to have demonstrated a lot more kind of traction in order to raise that kind of capital. But yeah, to get going and launch a WeFunder campaign, a smaller campaign, there's very few criteria.
Awesome. And I'm glad that you mentioned that, because one of the things that, so I did a video the other day just talking about this and introducing this, like I said, in response to, you know, all of those other things that I think, you know, are a little ridiculous. But one of the things that I was saying to them is, you know, you have to have a strong founder. You have to have a following. Like, you can't just have a good idea, right? Because you guys are taking a risk as well by, first of all, it is not like GoFundMe where you just sign up and you set up the campaign and it's verified. There is a process to getting on, right? Because like you said, there are some criteria, there are some things that you look for, even though the criteria is very low. And guys, for those of you that are interested, you can certainly reach out directly to me, and we can talk about just a little bit more of what that criteria is, so that you guys can be ready to pitch to Jonny and his group to see if you are prepared. So one of the other things they've asked about is, how long does it take, like from start to finish? So they've met the criteria. You guys say, great, you're a good fit for WeFunder. Now it's time for them to get on. Before we talk about length though, because this is another question. At that point, what happens? What are they looking at? You guys say, okay, you're approved. And let's talk about a smaller raise around that 50,000. What's the next step for those guys?
Yeah, so if we connect and we're like, yeah, oh, this is great. Like when we connected with Lamar, it's like, oh, you know, Sunjoin, like great company, great founder, like great fit for WeFunder. And I can't remember how much he raised. I'm going to look it up in the background here, but yeah, you know, so it's like, okay, let's go. He wants to launch a WeFunder campaign. We want to work with him. So then we'll have an account manager who works with the founder on filing the Form C. That's a legal form that you need to file with the SEC, which legally allows you to launch a regulation crowdfunding campaign. As part of that, you need to provide financial statements. This is kind of a legal requirement the SEC put in place. So you attach those financial statements to the campaign. You put together the campaign page. You think through what's the structure of the investment. So is it equity or debt? Is it a convertible note? What's the valuation, etc. And then kind of, so an account manager helps you put all those pieces together. Then we file the Form C with the SEC, and now you can publicly promote the offering and run the campaign. So to your question, like that timeline, I'd say on average is about a month. If you're raising more than $107,000, slightly interesting number. It's not a round number, it's $107,000. But if you're raising more than 107K, you need an independent CPA, an accountant, to review 2 years of your financials. So if you're raising 50K, you still need financials, they just don't need to be reviewed. If you're raising more than 107K, you need to get an accountant to do the review. And usually that accountant review is what can take the time. And so if you have books that are in a total mess and, you know, really it takes the accountant a long time to do a review of them, that can extend the time that it takes to launch the campaign. But hopefully if the books are pretty clean, you know, I'd say the average is about a month to launch the campaign. And then kind of the actual running of the campaign, I would say the average there is about 4 months, 3 or 4 months. You know, we allow companies to raise for up to 8 months. So if investments are keeping coming in, you can still keep the campaign open. You know, and we've had many companies that will raise 7 figures in a matter of a few days. So it can be very quick as well. Average is probably 3 or 4 months. And what's nice is we can do what's called a rolling close. So if you pass your minimum of funds, committed funds and escrow, let's say you're trying to raise $500,000 in total, you might set a minimum of 200K. And once you pass 200K, we can send you whatever's in there, and then you keep raising up to 500K.
Awesome. So again, this is important, guys, for you to get, because 2 things that he said: you must have financials. And if your books are in disarray, right, it's essentially your fault that this may take a long time. This is why when you're going to do something like this, you want to make sure that you are operating like a legitimate company. I know Vanessa Braxton did a raise with WeFunder. That's my client.
Who's awesome.
Everybody.
She was one of our first podcast guests. We have a podcast at Venture Capital. If you Google Venture Capital, Vanessa Braxton, you'll find her. You can listen to the podcast we did with her. It was awesome. We'll have to have Lamar on as our next guest. Oh my gosh, Lamar! I can't see everybody, but Lamar, Jonny said he had to have you on as a guest. Absolutely. Lamar, if you go to WeFunder.com/sunjoined, you'll see Lamar. He raised 525K. It looks like from over 1,000 investors on WeFunder. Pretty cool. Awesome. So guys, this is why this is important, because for those of you that definitely are connected to me, you're connected with my page. You probably know who Lamar Wilson is, but you almost certainly know who Vanessa Braxton is. And these are people that you can reach out to directly, right, to ask questions about their experience. Jonny just shared with you how much SunJoin was able to raise. And a lot of you, I know that I'm connected to, are SunJoin investors. And a lot of you are Black Mama Tea and Cafe investors as well. So and Vanessa raised more than $1 million on WeFunder. I'm looking at her page. She has over 2,000 investors. And I think she was the first African-American woman to raise $1 million on Reg CF, which is really cool. But yeah, she's a baller. That is an understatement. That is certainly an understatement. So just a couple of more things, because I know our time is winding down. What would you say would be some of the challenges that you've seen? For example, some of the people that come, and let's say that for whatever reason, like they're not approved. What are some of those challenges though,
Or what are some reasons that would, let's say that they did have everything, right? But what are some things that are, I guess, I don't know how to say this except to say, are there some criteria that are more important than others when there is a determination being made about who you're actually going to include on your platform?
Yeah, so we've actually made a significant shift recently away from kind of being the gatekeeper ourselves and more towards being an open platform. So that's kind of
Wow, okay.
when you talked before about like what are the criteria you guys have, like they're actually more relaxed now than they were when Vanessa raised or when Lamar raised.
Wow, okay.
Yeah, so at the end of the day, like the kind of black and white criteria, objective criteria we have is if you can raise some capital. And so what we say is, can you raise $10,000 of capital from your own kind of outreach to investors? And if so, if you can kind of prove that, then we'll go ahead and launch you on WeFunder, you know? And so we wanted to move away from, I think, like, you know, gatekeepers. I think a big part of the vision of WeFunder as being a democratic, open platform is that gatekeepers get it wrong, right? And they get it wrong kind of with things like, you know, Theranos, where making investments that they shouldn't. They get it wrong where they don't make investments, like Airbnb, I think, like pitched tons of investors before they got their first check. Airbnb, right? So there's a lot of ways where the gatekeepers like don't invest when they should, maybe. And then that's not even talking about like, you know, gender or racial equity. And if you look at like the percentage of capital that goes to women founders or founders of color, it's like obscenely low. 77% of VC goes to 3 states, California, New York, and Massachusetts. So, you know, we don't want to be like, as a white man who until recently was living in California, I don't want to be that white man in California that's like, you know, through my own bias, like preventing founders that should get their shot of launching on WeFunder. So as a platform, we kind of made a big shift towards being a more open platform. And so the black and white criteria is, can you raise 10K of investment? And if so, then we'll go ahead and file a Form C with you and try to help you, you know, put that campaign publicly up on WeFunder and raise from money accredited investors and enable you to publicly promote it, which is what regulation crowdfunding enables you to do. So that's it. And you can go to wefunder.com. You can click where it says raise money, and you can fill out an application and start to try to raise that first 10K. And if you can do that and kind of prove yourself that, okay, you can pitch investors and start to raise some money, then great, we can go from there. And so then it's kind of, so that's like, then the criteria, it gets away from like, what's your MRR, you know, or like, I don't know, whatever other kind of hard criteria investors are looking for. And the criteria becomes, you know, can you raise that 10K? And then it's kind of up to you as a founder to kind of prove that.
Yeah, absolutely. It essentially, guys, allows you to really leverage your influence so that it, especially if you go the equity route, right? Then you're not taking on debt. That's the great thing, right? You're not taking on debt, because a lot of times, you know, a bank may not lend you money because they feel like your business is such a risk. You could have great credit, you know, I mean, your business could be healthy, but the industry could be a risk. You know, there are lots of things that would prevent you maybe from getting a direct debt loan, that your influence could get you even more money, because that's the other thing, right? Because like you mentioned, there's the first threshold of $107,000. Now the top number has been increased. Right. I think since definitely since Vanessa did the raise, there was an increase, I think, at the SEC, where now you can even raise more money than you could initially.
Yeah, the maximum right now is 1.07 million. The SEC are currently considering reforms to the regulations that would increase that to 5 million.
Okay.
They're still pending.
Oh, good.
But
okay.
on WeFunder, you can raise a combination of Reg CF and Reg D. And so you have companies like Immersed or Grow Guru that have recently raised 2 million through the platform. If there's demand from investors, you can certainly raise more.
Okay. Okay, awesome. So I think this is our time, guys. If there is anything else, is there anything else that you'd like to just share with our audience before we let you go?
Yeah, so I would say, if you're interested in raising capital with us, you can go to wefunder.com, click the button at the top, and just start working on an application, and we'll take it from there. It's very easy to get started. If you want to consider investing, you can click on Explore, and there's 113 companies, and you can become an angel investor today for $100. It'll take you 5 minutes. Find a founder that you think looks cool, and you can be a part of their story. I think that's really awesome. And then also, like, my email is jonny@wefunder.com. Feel free to email me, jonny@wefunder.com, and feel free to email me if you have questions. I'll be happy to help and get on a phone call and tell you more about the pros and cons of WeFunder, and hopefully we might be able to help you raise the capital you need to grow your business.
Awesome. Well, I will definitely be giving you a call. I have a few clients in my pipeline that I think will fit, especially now that the gatekeeping is a little bit more relaxed. So we will probably be in touch more than we've been in touch these last few years. Now that I have a little bit more information. So thank you so much, Jonny, for spending time with us today. I really appreciate it, guys. For those of you that are watching on a replay, you can drop your comments in the comment section. You guys can contact me if you have some pre-questions before you reach out directly with Jonny. Please make sure that you have your stuff together before you go and start the application, because you don't want to have something not together that will require a misstep. So thank you so much, Jonny.
You're welcome. This is really fun. And sorry, next time I'll try to wear a collared shirt or something. You're really showing me up there. Like, it really doesn't look like I have my shit together visually on this call. But I've got 2 young kids. We just moved house. It's been a long week. So yeah, next time we do this, I promise I'll be wearing a shirt and tie.
Well, okay, I'm going to hold you to that, which means I have to plan something, which I will, because I do want to put something together about business funding. So I definitely will make the commitment to you to give you an opportunity to wear a collared shirt.
With Vanessa and Lamar, you know all the cool cats, LeTonya. So pleasure to do this with you, and yeah, hopefully we'll do a lot more together.
Okay, thank